Hello, welcome to this special broadcast of the Central Bank of Nigeria's Monetary Policy Committee meeting, the fifth in the year. In a few minutes, the Governor of the Central Bank of Nigeria will be outlining the position of the committee, its key decisions that local and foreign investors, as well as key decision makers, analysts, and the likes are looking to. Nigeria's economy recorded a strong 5% GDP growth in the second quarter of this year, with analysts attributing the strong performance to base effects from last year's contraction. But also inflationary pressures are easing after the fifth consecutive drop in August, where we saw headline inflation down to 17%. Of course, the big discussion point these days is the value of the currency, and the parallel market in naira continues to fall to an all-time low. So what outcomes should we expect from today's meeting? Well, I'm joined by Bismarck Rewane, the CEO of Financial Derivatives and member of the Presidential Economic Advisory Council. Andrew Nevin is the chief economist at PwC Nigeria. We also have Mansur Ahmed, the president of the Manufacturers Association of Nigeria. And also joining us is Nnamdi Nwizu, co-managing partner at Comercio Partners. They will be, of course, joining me to preview and, of course, review the MPC's decisions. Gentlemen, it's a pleasure to have you all here. I'll start with you, Bismarck. As usual, we always like to hear what your call is. So what are you expecting from this meeting? We need you to unmute, Bismarck. I think you are muted.
Okay, more likely than not, you are going to have a status quo decision, but we leave the probability of a 30% probability of a cut of 50 basis points in interest rates in the MPR. But having said, the consensus of opinion is that the status quo will be maintained because it's too early in view of some to make a change in the interest rate basis at this time.
All right, let's go to Andrew now. Andrew, do you share that sentiment? What else are you looking for from this meeting?
Well, I mean, as people who follow me know, I never make predictions, especially about the future. But I mean, I think as Bismarck says, I think the most likely outcome is a status quo. There isn't a particularly compelling reason for a cut yet at this stage. But what I'm most interested in is just seeing their analysis of the overall economic situation. I mean, we all kind of understand the pressures here and what's happened to the economy as a result of COVID. We also have international things going on, particularly around higher inflation in other countries. We're always concerned here, but you see the headline numbers in inflation in the United States now exceeding 5%, the first time since, I think, 1981, which I'm sad to say old enough to remember. So I'm really interested in the analysis from the MPC. It's always excellent. I'd like to just see how they're thinking about where the economy is at.
All right, let's go to Nnamdi now. Nnamdi, you follow the markets. What do you think the markets are looking for in this meeting?
Well, first of all, what they're looking for and what we expect is a bit different. But expectations, I don't expect anything with regards to the major indices. However, market is looking or expecting a bit of news around FX policies and what's happening. We've seen quite a bit of noise coming out of recent. We've seen quite a bit of activity coming out around FX. We've seen some sort of supposed clampdown on Abuki FX. We've seen some frowning around parallel market rates and all. And central bank also seems to be ramping up around people activities in the parallel market. So I expect to see quite a bit of activity around there.
Well, certainly, I imagine that the central bank must provide some guidance in terms of Forex policy. So let's get to you, Mansur. You are the president of the Manufacturers Association of Nigeria, and so you are in a good position to tell us more about the expectation of corporate Nigeria in terms of Forex policy in particular. How do you, first of all, assess the moves that the central bank made at the last MPC meeting, where it clamped down on supply of dollars to bureau de change operators? Since then, we've seen the parallel market rate move to an all-time low. Your overall assessment of how things have progressed since then? All right. I think, unfortunately, we have the connection to Mansur is broken up, but hopefully we'll come to him shortly. But let me take that question back to you, Nnamdi. Obviously, I think that is what many will be hoping to get some guidance on. I think we do have Mansur back now. Mansur, can you hear me? If you can, we'd like to get your perspective on the Forex policy of the central bank ahead of this meeting. Well, I think we're still struggling to connect with him. Okay, so I'll throw that same question back to you, Nnamdi. What's your perspective on how the market has evolved since the last MPC meeting?
Well, between the last MPC and now, I'm not sure so much has changed. We've seen, with regards to power markets, I think that's where we have seen some activity, and we've seen the rates flying from sub 500 to about 570 supposedly from market sources. And I think that has become a bit of a major concern for most people. We know that, or we hear that there continues to be quite a bit of a backlog, anywhere from about 3 to 4 billion outstanding. We know we have offshore roughly about 1 to 1.5 billion, which is still outstanding, and locals roughly about 2 to 3 billion outstanding. And the pressure continues to increase. Not much has changed in regards to that. We've seen the central bank start to sell PTAs and BTAs to individuals, also trying to clamp down a bit on the fraud going on in that sector with regards to people printing tickets and all sorts of things and getting fake visas to try and get access to dollars. The problem still remains that as long as you continue to have widespread between the government's rates or the central bank rate and the private market rate, you continue to have all sorts of people trying to play tricks and people trying to buy into or get money at the official rate so they can run to and sell at the private market rates. The spread today is about 157 naira, thereabouts, between what you have as official rate and what is perceived to be the private market rates. So I think that pressure has still continued, and we'd like to see what the central bank does to try and address the concerns around that.
All right, let me go to Bismarck now. No doubt there's going to be a huge focus on Forex policy. The naira at 570 or thereabouts, depending on who you ask, is an all-time low. Can you speak to the implications of this? Because the rhetoric we're getting really from the central bank is that they're more focused on supply, and the pricing in the parallel market is not a huge concern for the authorities. Do you think that's a safe way to read this situation right now?
No, I think first of all, let's go to the primary goal of monetary policy, which is what the committee is going to focus on. It's inflation. Inflation is moderating, growth is increasing, and therefore that would be a good point. But central bank believes that the pass-through effect of the exchange rate into the domestic prices is also fueling some of this price instability. So what do you have to do to actually achieve the desired objective? One is that the demand and supply have not changed since July 27 to now. That's true. Two, the fundamentals, oil price is higher, production is probably about the same, and the balance of trade is about the same. Therefore, why is the naira falling so sharply? It has lost over 14% between July and now. The only reason why is that the structure of the market has changed. The intermediaries from which the Forex sold by the central bank gets to the market has changed. You've substituted the BDCs with the banks. The banks have a structure that doesn't reach out to the market. So what you need to do, if that structure is changed and in such a way that the price at which the central bank is selling both to the banks and to the BDCs, if that adjustment takes place, then the market will correct itself and you will see an appreciation. But again, you cannot use administrative measures to solve a market problem. And so time will tell. And I do not think that the Monetary Policy Committee is going to focus more on the exchange rate, but they'll be looking at it from the prism of an inflation management.
Right. But Bismarck, if I come back to you very quickly, don't you think that the pricing that we're seeing in the parallel market, regardless of how you view the amount of activity in there, doesn't that suggest the quantum of demand? Because we've seen it really move over the last few weeks.
No, it is because of the supply. You see, the demand gap, if the supply of Forex is rationed in the official market, people go to the private market the autonomous market to fill up the gap that they couldn't fill up in the official market.
Right.
If you increase the amount of supply in the official market, automatically the demand in the autonomous market will drop and the naira will appreciate. So there are three things. One, the normal demand gap, the speculation, right, the fear, and the uncertainty. So people price all of these things in. So you can see a currency trading about 30% above its purchasing power parity value because of fear and speculation. And that is part of what is happening.
All right.
Of course, there's speculation, there's sabotage, there are all sorts of things.
Okay, I think we do have Mansur connecting with us now. Mansur, thank you so much for joining us again. Earlier, I wanted to hear your assessment of the foreign exchange situation since the last MPC meeting. If you can unmute yourself because you are muted, we can't hear you. Thanks. Okay.
Hello, can you hear me now?
Yes, we can hear you now.
Yes.
Please go ahead.
Okay, yes. Well, I'm sorry. My network went crazy just as you started, so I wasn't able to follow the discussion. But I think with regards to the foreign exchange market, I think what has just been stated really is a key situation, that the demand and supply situation must be a key factor in determining the trajectory of foreign exchange. But frankly, I also think that there's a lot of perhaps leakages in the foreign exchange market still, and if that is not blocked, it will continue to definitely undermine the stability of the market. I believe also that there is need for the CBN to prioritize when they withdrew foreign exchange from the BDC. Yes, it should make a bit of a difference to the particularly the productive sector, the manufacturing sector. But I'm not sure that has actually reduced the significant amount of foreign exchange leakages going into sectors that perhaps really could be significantly contained.
But Mansur, if I can just...
The manufacturing...
Sorry to jump in, but I think this is really important to get some perspective on, because you are the president of the Manufacturers Association of Nigeria. What's your assessment of the extent to which the central bank has improved supply of dollars to manufacturers and businesses in general since the last MPC meeting, where we saw the central bank take a decision to move all the dollar supply to the BDCs to the banks?
Yes, I think it may have helped a bit in some respect, but frankly, like I said before, the supply perhaps to the PTA, BTA, the personal sectors has perhaps been more than was necessary, because I thought the plan was the CBN intention was to try and direct more foreign exchange to the productive sectors. And from the impression we're getting from our members, there has been very little improvement at all. And if there was, it's more probably to the larger players, whereas the vast majority of small and medium enterprises really have not seen any significant improvement in the supply of foreign exchange. And most people are still having to go to the parallel market, where, of course, as we have seen, the premium has gone up significantly. Right. And frankly, that is only going to create more stress to productive sector, to the manufacturing sector in particular.
All right, thank you so much for that. I think that's really useful insight. Let me come to Andrew. And Andrew, I just want to throw this curveball at you and just get your perspective on the potential for a rate hike. And I'll tell you why I think so. If we can read anything into the central bank's policies, it does appear that as though they are trying to fix the foreign exchange issue. But I think that while we're expecting all these dollar flows from the Eurobond and the SDRs and so forth, my guess is that it won't be sufficient. So at some point, you need to bring the foreign portfolio investors back into the game. So do you think that is conceivable, that we could see a strategy around a rate hike that could attract foreign investors?
Yeah, no, I think it's feasible. I mean, we need more dollars in the system. I think there's, from our perspective, three effective sources of this. One, of course, is increasing the diaspora remittances, which is really a core policy of the CBN, a lot more focused the last 12 months on that. Second is foreign direct investment, and of course, there's a lot of focus on that. I want to give a big shout out to the national heroine, Nnamdi Nwizu, whose term ends as the, I'm not sure if it's chairwoman of NIPC, but it ends in 7 or 8 days. She's done a fantastic job. But because of COVID, I mean, people don't do foreign direct investment unless they come and visit a place. So that essentially dried up in 2020. We now have the PIA, which will hopefully open up some more FDI in that sector. And we can rebuild FDI elsewhere. But of course, portfolio investment can move a lot faster, but it's very sensitive to interest rate. And we now have a situation, as I said, where we have higher inflation around the world. So a real financial repression in the returns, in the real returns, say in UK gilts or in the Japanese yen or in US dollars. So there could be an argument we need more foreign portfolio investment. Those three sources are all there. The FDI is going to be delayed. We work strategically on the diaspora, but in terms of an immediate hit, maybe you're exactly right. We'll all be surprised with the rate increase.
Right. Okay, Nnamdi, same question for you. Do you think it's conceivable that a strategy can play out like I proposed just there?
Well, initially we had thought that was a possibility, but looking at what happened at the last NTB auction on Wednesday, where there seemed to be some non-competitive demand, which was said to be a rumor to the central bank, which sort of stopped the rate from spiking. And if that is true, then it means that the central bank isn't ready to raise rates now. And to a large extent, I think it makes a bit of sense. If you look at a few things. One, we all know that there are quite a number of CBN FX swaps going out there. So they can offer higher rates to targeted large volume offshore investors versus generally increasing rates across the spectrum, and which generally pushes up rates and yes, might help inflation a little bit, but that might basically slow down the growth of the economy. And we also know that because of the fact that the inflationary pressure we're seeing has to do more with more of cost push than demand pull, right? And looking at things like insecurity and coal, we realize that might not really solve the problem at this point in time. So I would not expect them to do that. But hey, I mean, you can never predict what they come up with in there.
Okay, let me come back to you, Mansur. And we just Nnamdi just spoke of inflation, and I think that is potentially. Oh, okay. I think Mansur is back on the screen now. So, Mansur, if you can just speak to this point about the cost of the parallel market rate staying where it is now. Potentially, could we see more inflationary pressure? You spoke of perhaps many of your members not being able to get foreign exchange. And so if they can't get it in the official market, they perhaps have no choice but to get it elsewhere. All the good work we've seen in terms of the 5 months consecutive declines in inflation, could we see an unwinding of that, and potentially because of the pricing of the naira in the parallel market, we could see more inflationary pressure?
Yeah. Well, given the fragility of the economy, I think the central bank perhaps should be congratulated for sustaining the growth rate, but I think the balance between sustaining growth and containing inflation seems to be at the top of the central bank's mind. And to that extent, perhaps it is right that we need to strengthen the economy to ensure a greater resilience to avoid this yo-yoing that the economy has been going through over the past 3 quarters or so, and even longer. So possibly, I do not expect the central bank will do much, anything different in this particular meeting, and we may expect to see the same decisions sustained, trying again, as I said, to balance the growth needs with the containing and the sort of keeping a tab on inflation.
Right. Bismarck, same question for you on the cost of a high rate in the parallel market in terms of inflationary pressure? Do you see that happening?
Well, let me put it this way. When you look at inflation from a policymaking perspective, you've got to analyze it to see whether it is structural and persistent or it is transitory. An exchange rate pass-through will be transitory. When the market corrects itself and if you change the market structure back and the naira appreciates again, then maybe you get that. So the policymakers are going to be looking at how structural is the inflation that you're seeing and how much the inflation moderation over the past 5 months, which came to less than 1%, compared to the increase in output growth on the other hand. So you will now begin to want to say, should I help complement fiscal policy by stimulating growth, or should I actually hike up interest rates and see whether that will deal with a hike in interest rates actually deals more with the structural inflation. And if this inflation that you're seeing today is not structural, and therefore you may have to now begin to look at other ways and means of dealing with this. If it's just supply bottlenecks, but if it is much more structural, which I think it is, then we have to go back to the interest rate structure, because you cannot have interest rates this low while inflation is at 17 plus. The target of the central bank is 9%. That's the maximum. And you're having inflation at about 17.01. Inflation in Nigeria is at least almost 8% higher than the African average and almost 12% higher than the global average. So something has to give somewhere.
All right. Okay. If I can come back to you, Andrew, and if we can move away from monetary policy for a second, fiscal policy, there's a big conversation now about the debt burden of the country. And I wanted to just reflect a bit on that, Andrew, and the implications of that, even for monetary policy moving forward, as we continue to see the government move more and more towards borrowing.
Yeah, I mean, I think we have said the same thing for a number of years, but it's becoming kind of more and more urgent, which is the following, which is Nigeria does not have a debt problem any way you measure it. What Nigeria has is a growth problem. If the economy continues to grow, the headline GDP at less than the population growth, so we're getting poorer per capita, we'll continue to have the challenges we have. It's very hard to raise more revenue in an environment where people are getting poorer per capita. On the other hand, if we start to grow faster, we've said 6 to 8%. Central bank governors come out and said there's no reason the country can't grow in GDP terms in double digits, which we absolutely agree with. So if it grows faster, the debt number just evaporates. I've seen this happen. I lived in China for 10 years, as many people know. I saw it happen in China. If you have a growing GDP, what's going to happen is your tax revenue is going to grow faster than the GDP because people will be coming more into the formal system. They're more willing to pay taxes because they get benefits from it and because the economy is growing. So we have a growth problem. Right. So the fundamental question that the federal government should be asking is, why are we not growing faster? We're the biggest economic opportunity on the planet, and yet